So I think basically Bitcoin's going through this period where, I mean, it started at zero. Now 16 years in, we're at a 2 trillion plus market cap. It's still 0.2% of global assets. Gold is 2%. Gold, I think, is already kind of reasserting itself to some extent. And I think Bitcoin at a tenth of the size is playing catch up. And so I think it's this increasingly recognized global alternative that's been tested technically. It's gotten to a scale of liquidity where institutions are obviously interested now. They're the main drivers this cycle. And so I think it's basically just this side thing you can play in, which makes a lot of sense. In
Bitcoin is poised to surpass its all-time high. And while traders in Asia have been a big part of the story, they're not the only ones fueling the rally. U.S. investors have also jumped in, driving up the Coinbase premium, the price gap between Bitcoin on Coinbase Pro and other exchanges such as Binance. Lyn Alden, founder of Lyn Alden Investment Strategy, says the bigger picture is about money itself. The world operates with around 180 national currencies, all of which are losing value, some at a slow pace while others are losing value rapidly. Developed economies expand their money supply by roughly 6 to 8% a year. Developing countries often do it in double digits. Bitcoin? Its supply is capped, with minimal new issuance. Currently, Bitcoin remains relatively small compared to global assets, accounting for only about 2% of gold's market capitalization, but it's growing. Institutions are now a significant force behind demand. And while payments might save a bit on transaction fees, Alden argues the real attraction is escaping the slow theft of currency debasement. Metaplanet's latest purchase adds 518 BTC at an average price of $118,519, increasing total holdings to 18,113 BTC. Year to date, Bitcoin is up almost 30%, with Asian trading hours alone accounting for more than 25% of that gain. It has now become the world's fifth largest asset by market cap, behind only gold, Nvidia, Microsoft, and Apple. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors to help us grow. We're here to keep bringing you sharp analysis and voices that understand what's unfolding.
Yeah, I don't
Thanks
call
for
it a
watching.
hedge per se, because a hedge is generally something that pays off at the moment you want it to. So if you wanted to hedge against the stock market going down, you buy certain types of puts, for example. It's more just like as an alternative. It's a parallel system that has many desirable attributes. So as we live in a world with 180 currencies, and they're all generally devaluing at a variable pace. I mean, developed market currencies historically grow in supply by 6 to 8% per year. Developing market currencies historically grow at double-digit percentages on average, some of them much higher. You have Bitcoin, which is this global alternative that people have with no long-term dilution, just currently is very low supply inflation as it reaches its total coins issued. And more broadly, I put it in the camp of having solved fast settlement. So one of the things I've argued in Broken Money and elsewhere is that for about a century and a half, ever since the invention and deployment of the telegraph, we lived in an age where you can make a transaction globally roughly at the speed of light. But there was no way to send final value in any sort of fast way. And so we became reliant on these big centralized ledgers to kind of arbitrage and maintain the difference. And Bitcoin, for the first time since the deployment of the telegraph, kind of closes that gap where it says now we have this decentralized ledger backed by energy and backed by code and distributed ways of enforcing it that allows nearly instant global settlement. And so rather than being reliant on a big central bank or a big set of commercial banks, there's this alternative, and it doesn't debase at any sort of the same way that fiat currency systems do. So I think basically Bitcoin's going through this period where, I mean, it started at zero. Now 16 years in, we're at a 2 trillion plus market cap. It's still 0.2% of global assets. Gold is 2%. Gold, I think, is already kind of reasserting itself to some extent. And I think Bitcoin at a tenth of the size is playing catch up. And so I think it's this increasingly recognized global alternative that's been tested technically. It's gotten to a scale of liquidity where institutions are obviously interested now. They're the main drivers this cycle. And so I think it's basically just this side thing you can play in, which makes a lot of sense. For long-term store of value, I mean, they can turn to real estate and other imperfect things. Sometimes they solve needs they have, like where to live. People would invest in equities and gold and fine art. But especially on the liquid side, everybody in the world to some extent has a store of value problem. Whereas fewer people wake up every day and think, I really have too many payment frictions in my life. Some people do.
Yeah.
Africa has 40 currencies, or
As you say,
Latin
not
America.
here, not
Yeah,
here, but yeah, definitely in other places. Yeah.
exactly. So there's some percentage of people that wake up and say, I just my payment options are so bad. A lot of us don't, especially in the developed world. And so instead, now if you're like Walmart has something like 3% net profit margins or something, right? So if you're doing these crazy volumes, then you might actually think, if I can trim some basis points from payment processing, then maybe this could actually be meaningful. But for the average person, it's more about my wages are getting devalued, my savings are getting devalued. I'm kind of running on a treadmill. If you're anywhere in the developed world, it's twice the speed or more. And so I think that's the killer app in, say, the first quarter century of Bitcoin's lifetime, which is when you go from zero to several trillions. There's capital gains tax frictions against payments. There's the fact that volatility is an issue, and you need upward volatility to grow. If you get upward volatility, it's going to come with leverage, euphoria, and it's going to come with then periods of inevitable downside volatility, which prevents people using it as like their 3-month working capital.
Right.
It's too volatile at that time to denominate most things in it. So your landlord is not going to denominate your rent in Bitcoin. They might let you pay it in Bitcoin relative to dollars, but they're not going to denominate it in Bitcoin because they have expenses. So basically, there's an existing network effect that Bitcoin's growing into, where people have their liabilities denominated in dollars or whatever their local currency is. They need some degree of kind of near-term stability in their working capital to meet their liabilities. And so I think the current era is that it serves as portable capital with the option of, enthusiasts and people that find various payment frictions can turn to it. I've used it as a medium of exchange at times. Also, there's the alternative stable coins, which again, if you're just thinking hold it for 3 months, pay, receive, and then anytime you get a meaningful excess, you put it into Bitcoin or other longer term stores of value. That's solving a problem for a lot of people, especially if they're not in like a totally sanctioned area where even stable coins are more likely to be shut off for them. So if they're not kind of personally running into the fact that stable coins are centralized, that's not really affecting them, then they're more likely to keep using them. And so I think right now it's just a very crowded market for payment options. And I think Bitcoin is the best long-term one because it's like the most unstoppable.
By 2025, Bitcoin will have moved beyond its early identity as a purely speculative play. It's now treated as a strategic reserve asset, a hedge against currency debasement, and a fixture in institutional portfolios. Nearly 60% of institutional investors allocate at least 10% of their portfolios to Bitcoin, and spot ETFs have pulled in $65 billion in AUM. BlackRock's iShares Bitcoin Trust alone controls 6% of the circulating supply, clear evidence of how far institutional adoption has come. The market also sees aggressive moves from major players, like David Bailey's $760 million smash buy. By the second quarter of 2025, ETFs collectively hold 6.5% of Bitcoin's total supply, easily surpassing the combined holdings of all public companies just 2 years earlier. Lyn Alden views large-scale sovereign adoption as a longer-term development. She points to the MicroStrategy playbook, pioneering corporate accumulation followed by a slow, delayed wave of followers as the likely template for nation-states. Early movers such as El Salvador and Bhutan have acted, and others are indirectly participating through mining ventures or ETF positions, but full-scale sovereign reserves may be a story for the next cycle. Let's get back to the interview.
On average, I view it more as a next cycle thing, most likely. At least for numbers that really matter. So for example, when we saw when MicroStrategy started the Bitcoin Treasury strategy, they immediately started marketing the idea to other corporations. They would hold a conference Bitcoin for treasuries. And really no one followed them anytime soon.
I think that was because of GAAP accounting rules, or at least that's how I cope.
Yeah. Well, there were accounting issues, and also just not many people were in the position of Michael Saylor, where he had such a strong ownership level of the company. He was able to think in terms of years and decades rather than quarters and maybe a couple years. So instead of being like a career executive, like someone who could get easily fired or just trying to optimize their near-term pay package, he was an owner and able to kind of make these long-range moves. That's pretty rare. But we started to see this cycle finally after a cycle delay, better accounting rules, and like a lot of Bitcoiners saying, well, if existing companies are not going to do it, we'll basically start new companies and do it. So it took more time than many people thought, but it kind of followed. And I think the same thing happens with sovereigns. I mean, obviously, El Salvador was an early mover. The Kingdom of Bhutan was an early mover. You see like, UAE at the sovereign level makes some mining investments and ETF investments and things like that. There's, a handful of entities out there. Generally speaking, the smaller ones can kind of execute faster on average. I think we'll continue to see talking about it more so than someone kind of just like jumping in and wanting to buy half a million coins from some big country and kind of doing the full MicroStrategy playbook. But I do think that over time, this will continue to leak into sovereigns. They'll own it indirectly. Like you'll see a sovereign wealth fund own MicroStrategy, for example, or own an ETF or potentially buy some Bitcoin around the margins. And it just kind of keeps trickling in from there as it becomes a bigger, more liquid, more understood network. I think that one of the bigger things this cycle is increasingly understood at the sovereign level. At least it's here to stay. With like the SEC kind of losing their court case and having to let the spot ETFs come to market, and then this kind of pro Bitcoin, pro crypto administration, which is that I think the market's kind of reached the point of scale and acceptance where even if say there's elections down the line, we have a less favorable administration, it's hard to roll back all of it. Even if you take, three steps forward, one step back, it's still two steps forward. And especially when you're looking at a global scale, where one country could pull back, another country can say, well, then come to us. We'll bring your businesses and your capital and here. So I think this cycle is kind of marked more by it's here to stay at the institutional scale and allowed by most at least semi-free countries. Over time, as more cycles play out and as the asset hopefully stays big and liquid, you'll get more sovereigns that actually maybe want to buy it and hold it as so. So I think basically Bitcoin's going through this period where, it started at zero. Now 16 years in, we're at a 2 trillion plus market cap. It's still 0.2% of global assets. Gold is 2%. Gold, I think, is already kind of reasserting itself to some extent. And I think Bitcoin at a tenth of the size is playing catch up. And so I think it's this increasingly recognized global alternative that's been tested technically. It's gotten to a scale of liquidity where institutions are obviously interested now. They're the main drivers this cycle. And so I think it's basically just this side thing you can play in, which makes a lot of sense.
Metaplanet has cemented its position as a heavyweight corporate Bitcoin holder, ranking 6th globally. The company now controls 18,113 BTC, a stash valued at about $1.85 billion based on current prices. Its average purchase price sits at $101,911 per coin, underscoring both the size of its bet and its willingness to buy into the market at elevated levels. Alongside the update on holdings, Metaplanet released fresh performance metrics tied to its Bitcoin strategy. From July 1st to August 12th, its BTC yield, a ratio tracking Bitcoin holdings against fully diluted shares outstanding, came in at 26.5%. This figure reflects both the company's pace of accumulation and the dilution impact resulting from its share structure. The BTC yield metric has been anything but stable over the past year, swinging in response to Bitcoin price movements and treasury strategy adjustments. In Q3 2024, BTC yield was 41.7%. By year-end, as Bitcoin's price surged and holdings grew, that figure exploded to 309.8%, signaling a period of extreme outperformance relative to the share count. The following quarter brought a steep correction to 95.6%, driven by market pullbacks and possibly new share issuance, before rebounding to 129.4% in Q2 2025. Bitcoin's rise to a top 5 global asset has been fueled by a mix of institutional accumulation, corporate treasury strategies, and growing recognition of its fixed supply in a world of constantly expanding currency. With ETFs now holding more of the asset than all public companies combined just 2 years ago, and heavyweight buyers like Metaplanet pushing deeper into the market despite volatility, its role as a strategic reserve is no longer theoretical. As corporate and sovereign players weigh the risks of late entry against the realities of fiat erosion, the question looms, will the next significant wave of adoption come from cautious governments or even larger institutional bets? So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support and I hope you enjoy the video.